Welcome back again, and now we have moved on to the balance sheet. Again, you'll notice that the dashboard has the same layout as with the previous version, so I'm not going to go into too much detail about that. What I will do now is enter an existing record. Now what you'll notice that for the balance sheet is that there's a lot less pre-populated data. The reason being, the balance sheet captures the assets and liabilities for your business. Now, assets and liabilities vary a great deal across businesses, so choosing to automate it would provide false and inaccurate information for business owners. Now, considering that the balance sheet is only prepared, you only need to prepare it, on an annual basis, that's not as big of a deal, so it is feasible for you to work with an accountant just to close out this record. What you'll notice, though, is that despite the fact that I said that it is more of an annual record, you do have the ability to track it on the monthly basis. Now, the reason for that are the accounts receivable and the accounts payable. Accounts receivable capture how much your customers owe you. So if you remember from what we covered in the cash book, whenever people made partial payments, it calculated the balance due. That's what the accounts receivable reflects. Accounts payable is the sort of opposite. It reflects what you owe your suppliers or your vendors. Again, as in the cash book, in the cost and expense section, whatever was the balance due when there was a partial payment, that's what we've captured here. Now what you'll notice is that the receivables and the payables are year-to-date amounts. That means that for all outstanding balances, they're all captured and aggregated within this number across all months until, of course, you close it out. So it follows that as people pay you and you go back and you update your revenue and expense to show that the payment goes from a partial payment to a full payment, this will move down to zero because now your customers no longer owe you money and you no longer owe your suppliers money. So it's very important to go back and update those records as you go along to make sure that it's captured accurately within the balance sheet. So I won't spend too much time on this because, as I said earlier on, it's an annual statement. It's not as high priority as the salary, the cash book, the cash flow, and the income statement, but it is useful to have on an annual basis, and it is useful to have an accountant support you in that process. So let's move on to the other statements. So moving on, my Skype keeps popping up. Moving on, we are now going to touch on the cash flow. Now, cash flow, for those of you who are not familiar with it, sort of really looks at your ability to meet your short-term cash needs. So if you have your money in a savings account versus treasury bills, the money in the savings account is more accessible. So if an emergency comes up and you need to have cash to meet those needs, you have a greater ability to meet your short-term cash needs if you have your money in savings versus treasury bills, just because the money is more easily accessible. That doesn't mean that one is better than the other. This is just speaking about the accessibility. So again, going into our cash flow, what we notice is that the majority of the fields are populated. So all of the fields that have been populated are the ones that are the most important. So looking at the cash that you have on hand at the beginning of the month, cash received from sales, the cash paid out to suppliers, and your cash position at the end of the month. So additional fields that are captured, if you have a loan, you can put in whatever your monthly loan payment is. That is on the principal, not including the interest. If you have purchased any capital that you didn't include in your expenses, so maybe machinery, equipment, all of that would go here. If there are other startup costs that you didn't include in your expenses, that would go here. Now, if the business owners happen to take out some money from the business for certain purposes, that would also go here. It totals your cash paid out, and then looking at that compared to your cash position at the beginning of the month, what you received from sales, what you paid out to suppliers, you then end up with your cash position at the end of the month. So that talks about how much cash you have on hand. So closing out of that, we then move on to the income statement, which I'm sure for small business owners is probably the most important. Your income statement tells you what your profits are looking like. As with the salary statement, we're doing this at a gross level, so sort of pre-tax level, but in terms of really being able to figure out if your decision-making process is effective, having these things at a gross level is perfectly fine. because that's still what's going to tell you whether or not the strategy you've taken for your business is an effective one. So let's go ahead and enter an existing record. And you'll notice that for the revenue and expense, there's absolutely nothing for you to enter. Everything is populated into these sheets. It's categorized. So let's say, for example, within your revenue, you'd enter pens. You'd chosen not to use the subcategory tab, and you'd entered pens 10 different times. It would group it all here. Same with any other categories of revenue or any other categories of expenses. You'll notice your totals are here, and then your gross operating margin is the difference between your revenue and your expense, and that more or less is your gross profit. So now that we have taken the time to go through all of the financial statements, you'll notice that what we've done is that we've made the process a lot simpler and a lot more automated, so you spend less time trying to figure out how to calculate these numbers. Other features that we've added are that you can go ahead and add users to your account. So let's say you have a company account. Whenever somebody creates an account under a company, the system will block other people from doing so that you're more organized and you have one administrator, and that one administrator will grant access to everybody else. When you grant people access, they'll have emails sent to them and they'll log in just like you did. And you can choose the 2 levels of access, whether you want them to just view records or you want them to be able to edit records. And at any time, of course, you can delete or edit whatever access you've given them or disable their access temporarily. Now the Contacts tab, this goes back to the work that we were doing with tracking our vendors and our customers. You can do it directly from the cash book, or you can go in here and add them one by one, whichever suits you best. Again, you can enter what their name is, you can choose whether they're a vendor or a client, then you can go ahead and add them. Of course, you can make edits as you go along, and you can also delete. Now last and definitely not least, we have our goal setting. Now this is a feature that we are really excited about because it's something that's really sort of going to show you the value of the system beyond just being able to keep your records. Now you may want to hit particular revenue targets during the year or expense targets or cash flow targets, or profit targets. This really sort of helps you to set those goals for yourself, to see how you're doing, and to receive emails to that effect to let you know how well it is that you're doing. Another ratio that we've added is the revenue per unit of cost. So that essentially looks at for each city of cost that you incur, city being the currency in Ghana, so that's the example that I'll use. For each city of cost that you incur, how much revenue are you generating? Generally, you like to be able to say that for every city of cost that I incur, if I can earn 1 city in revenue, at the very least, I know that I'm balancing out and doing a good job. Now, the hope is that you would move beyond that point of 1 divided by 1, or of your ratio being 1, to show progress. But that definitely is the baseline that you want to aim for. So when you create a goal, it will tell you to name your goal. So you can name that goal first and second quarter of 2013. But we already have one, so let's go ahead and view it. What you'll notice is that you can put in the numerical amount of whatever your goal is. You can put in the time period for the goal. You can go ahead and change the name of the goal if you want to. You can view old goals that you've set. And then you can set your notification, whether it's weekly, monthly, or never, and you just want to log in. Now, the graphs appear a little bit funny because it's dummy data that we've entered just for the purposes of this demonstration, but it really shows you sort of, how much progress you've made and what is left over here in green. So that, more or less is the new functionality in the system. We are really excited that you spent the time going through with us, and we really look forward to having you sign up and use Start Smart. As always, if you have questions, please send us an email, Juliana T, that's Julianat @startsmartgh.com. You can visit our website, have a look at our blog, or you can register for one of our monthly training sessions. We have training sessions on the first Saturday of every month in Accra for 1 hour. They are in-person sessions. If you're outside of Accra, you can also choose to join virtually. And what we do is we spend half an hour going through how the software works and another half hour talking about a predetermined business topic, just to help you sort of, more broadly think about what's relevant to your business and what's going to help you grow. Again, thanks so much for your time. We hope that you found this tutorial helpful, and we look forward to having you as customers.